Well, I think recently the geopolitical events have replaced central bank action as one of the main perceived drivers of returns, especially for the alternative space. But I think it's important not to let short-term publicity stunts get in the way of understanding sort of the underlying processes of change that are set in motion by policy changes, etc. Well, the short-term impact of regulatory changes, for instance, is that it diverts a lot of energy from the managers that try adapting to the new frameworks. But once the frameworks have been in place for a while, the energy can be sort of diverted back into the core tasks of actually generating returns for the investors. In terms of other geopolitical events, it's all these taxes and tariffs imposed. The reaction, people don't really know how it's going to play out in the long run, so there's a lot of knee-jerk reactions to it that are also smoothing out over time, I think. I think the main factor is the barriers of entry, and that you have a large regulatory overhead, which makes it difficult to start your own hedge fund, your own company. Also, just the size of investment. So you have a concentration of assets to really large institutions that also want to invest in large amounts, which means that these small managers aren't able to cope with those assets. So I think, that's the main disruptive factor, really. We need new blood in the industry. It's a good event so far. It's a mix of meeting colleagues, investors, and potential investment opportunities. So I think it's a good mix across both strategies and in terms of attendees.